Hi guys, my name is Pavan and welcome to my YouTube channel buildingyourdreams.com. So today in this chapter we'll be discussing further about NPO non-profit organization. So this is the part 2 video. So now in case you have not watched the part 1, please do watch it and come back to this video. So little more you'll be getting a clear picture about the basics about this NPO chapter, non-profit organization chapter, about what is legacies. So as well as as you all know that we discussed in the previous video about what is legacies, what is honorarium, what are capital items, what are revenue items, and how to classify them. Plus we also understood that what is the importance of income and expenditure account, and what is balance sheet, how to prepare a balance sheet and income and expenditure account. We also came to a conclusion about various topics in terms of capital items and revenue items further, which is divided as capital receipts or income, as well as capital expenditure and revenue items. We came to a conclusion about capital and revenue items. We came to a conclusion about the revenue, income or receipts, as well as revenue expenditure. We came to various examples. We came to know about various example. Plus we also studied about different classification of what is special. Special is always known as capital. We record in the capital side in the balance sheet. Plus we also studied about all the revenue items that are recorded in the income and expenditure account. So in this chapter we are going to discuss more about our NPO, that is on POQ question, practical oriented question, about what is receipt and payment account. Plus we are going to do one sum based on income and expenditure account, as well as the balance sheet. So guys, now let's get started. So first one is so normally the 5 marks question which they're going to ask you over here is like, prepare receipt and payment account. So now while preparing receipt and payment account, it is very important for you guys to know what is receipt and payment account. So now while preparing receipt and payment account for the year ending, you're supposed to write the year, and then debit, and over here credit, receipts, rupees, payment, rupees. So simple concept. For receipt and payment account, you're going to give the heading receipt and payment account for the year ending. Which year ending is that? Debit side, DR, and then CR, credit side, then receipts, rupees, payments, rupees. Simple. So now receipt and payment account, it is a real account. So receipt and payment account, it is basically which account? It is basically a real account. What is real account? Debit what comes in and credit what goes out. Simple concept. So real account, debit what comes in. What comes in, we are going to record in the receipts, plus what goes out, we are going to record in the payment side. What comes in the organization, we are going to record in the debit side, plus what goes out from the organization, we are going to record it separately in the payment side. Next one, all capital and revenue items are included. So as I said you before, in the part 1 we discussed about what are capital items, what are its classification, plus what are revenue items and its classification. So in this we are going to classify them. All capital and revenue items are included. So in this, all capital and revenue items are included. Next one, does not include depreciation and bad debts and no outstanding receipts and payment. So in this, we are not going to write, we does not include any depreciation. We are not going to write any depreciation. What is the meaning of depreciation? Decreased in the fixed value of an asset. We are not going to take that. Plus we are not going to take bad debts and no outstanding receipts and payment. And next important concept is that it starts with opening cash balance to balance brought down. It starts with opening cash balance and ends with closing balance. So it starts with opening cash balance and ends with closing balance. To balance brought down by balance carried down. Okay. So now you know how to create this format. First one is receipt and payment account for the year ending. You're supposed to write the year. Next, debit. Then you're going to write credit, receipts, rupees, payment, rupees. So now it's basically a POQ question. So it's very important that you write any five or what it can be five important concepts. For example, it can be like, in POQ it is very much necessary that you write five elements. So first one is to balance brought down. We are going to write any amount. For example, it's a POQ question, so you may write your own amount. As a result, I've kept it blank because you can write your own amount. To balance brought down, and two donations. So listen carefully. Real account, debit what comes in. So what not is coming to the organization. To donation is coming to the organization, right? So you're going to write that amount. To legacies, as I said you yesterday in the part 1 video, about legacies are nothing but the will, right? So will, it is nothing but a person in his deathbed, he writes his will that his property shall go to this particular type of organization. It's coming into the organization. So to legacies, we're going. That's the reason we are recording in the debit side. To life membership fees, the life membership fees, that amount is going to come in. It's going to come in the organization. So we're going to write life membership fees. To entrance fees, entrance fees also coming to the organization. So debit, what comes in, what all is coming to the organization, we're going to write in the debit side. What all goes out, what all goes out of the organization, we are going to write in the payment side. By wages and salaries, by wages and salary, you have to pay the wages and salary. So as I said you before, it can also be wages and salary, and other name for salaries are nothing but honorarium. Honorarium is also mentioned over here. Honorarium. Rent paid, you have to pay the rent paid amount. By telephone charges, what not payment, you have to pay as an organization, you have to take care of all these expenses such as wages and salary, you have to pay the rent, honorarium, telephone charges. At last you're going to write the balance carried out. Balance carried out, simple. So this is how you prepare the receipt and payment account for the year ending, whatsoever year ending. You may just give it debit side, credit side, receipt rupees, payment rupees. Receipts, you're going to write, start with the to balance brought down, and starts with opening cash balance and ends with closing balance. So we are going to end with the closing balance by balance carry down. And to donations, as we studied that donations which are coming into the organization, donations, legacies, life membership fees and entrance fees. And payment, what all you're going to give out of the organization, it can be wages and salaries, rent paid, honorarium, telephone charges. At last you write the balance carried out. Now let's see how are we going to prepare the income and expenditure account. So income and expenditure account, it is basically, it follows, it is a nominal account. So what is the rule of nominal account? One of the golden principles of accounting, nominal account: debit all expenses and losses and credit all incomes and gains. So debit side, you're going to record all the expenses and losses, and credit side, you're going to record all incomes and gains. Next one, revenue items include only in, okay, so income and expenditure account, as I said in the part 1, we are going to record only the revenue items, you're not going to write the capital items. Next, it includes depreciation and bad debts. It includes what? It includes depreciation. It includes what? Depreciation and bad debts. Similar way, it does not start with any opening balance and closing balance. Whereas in receipt and payment account, we have started with to balance brought down, by balance carried down. We are not going to write these things. Okay. So once again, just recapture it. Income and expenditure account, it is a nominal account. Debit side, all expenses and losses. So debit side, you're going to write all the expenses and losses. Credit side, all the incomes and gains. And revenue items, it includes only the revenue items. Revenue items, as I said you before, the revenue items, the revenue incomes and revenue expenditure, you're going to record into it, as well as it includes depreciation and bad debts. It includes depreciation and bad debts. Then it does not start with any opening balance and closing balance. It does not start with any opening and closing balance. Next one, in adjustment, stock value is closing stock value. Okay, this you'll be understanding a little more clearly when we do a sum related to it. So guys, now let's start towards let's start preparing an income and expenditure account and a balance sheet. So now, for you guys to understand a little more clearly, I've just taken a sum from our old NCRT textbook, that is from page number 503, section C, on Arpita Nursing Home. Arpita Nursing Home. So guys, the first question is like, the Arpita Nursing Home, Mangalore, was newly started on 1/4/2012. The following is a receipt and payment account of Arpita Nursing Home for the year ending 31st/3/2013. Then debit, credit, receipt and payment account for the year ending 31st/3/2013. So they have given donations, fees from patients, that is 50,000. They have also given entrance fees, subscriptions, endowment fund, interest from banks, miscellaneous receipts. By salary, in payments that they have given, by salary 1 lakh, by instruments and equipments 2,40,000, by diet expenses 36,000, by government securities, by office expenses, by furniture, by purchase of medicines, by closing balance, cash, bank 10,000 and 1 lakh. They have given the total balance. Then they have given certain adjustments. So adjustments are very important. Why? Because in your balance sheet, adjustments are considered a lot. So now let's start with adjustment. Office expenses outstanding. OS is nothing but outstanding, rupees 10,000. Subscriptions received in advance, rupees 20,000. Donations are to be capitalized. Donations are nothing but are to be capitalized. And then stock of medicines as on 31st 3 2013 is 4,000. Depreciate instruments and equipments by 20% and furniture by 10%. So now what are you going to prepare? You're going to prepare income and expenditure account and balance sheet as on 31st 3 2013. Now let's get started. So guys, as I just said you before, we are going to prepare income and expenditure account. So now it's very important that you write the name of what type of organization it is. It is mentioned over here. It is Arpita Nursing Home. So you're going to write first Arpita Nursing Home income and expenditure account. Okay. So what is the name given in the organization? That particular name you're supposed to write it. Arpita Nursing Home, debit side, credit, income and expenditure account. So you're going to give the heading Arpita Nursing Home income and expenditure account, debit and credit. Next, expenses rupees, income rupees. So first one, you're going to write expenses rupees, income and rupees. Simple concept. After writing the name, do not write starting with the income rupees and expenses rupees. That's exactly wrong. For the income and expenditure account, just think it is in just opposite format. That is expenses you're going to write first, then expenses rupees, income rupees. So now all the expenses you're going to write over here, rupees, income, all the incomes, and credits are all the like on the rupees you're supposed to write all the rupees from the income side. So now basically looking in a problem, it's very important that how to analyze a problem and understanding it, it's very important. So now starting with our expenses. So remember carefully whenever they give you such type of questions, yeah, it's very important that for the expenses, whenever expenses is there, keep your eye towards the payment side. Okay, expenses, payments are similar, right? Expenses. So just note down all the expenses and payments. So you're going to take all the expenses from the payment side. And then receipts. Whenever receipts are given over here, all the receipts, you're going to basically, not all the receipts like which are revenue receipts and incomes, you're basically going to record in the income side. So receipts you're going to record in the income side. Expenses, all the payments which are there, we are going to record in the expenses side. So receipts you're going to record in the income side, and payment we are going to record in the expenses side. So now let's get started. So first one is by salary is 1 lakh. So by salary is how much? My salary is 1 lakh. So we're just taking it directly. Why? Because there is no particular type of adjustment. So in case if adjustment is given, we are supposed to understand there are different ways of tackling that particular type of adjustments. So now let's see through the first one, that is by salary. By salary is how much? Salary is 1 lakh. So I've taken it directly. There's no adjustment given. Right. Next one, buy instruments and equipments, rupees 2,40,000. So by instrument and equipments is how much? 2,40,000. So you're not going to write directly this 2,40,000. Let's check is there any adjustments over here. So instruments and equipments, not the first one, second one no, third one yes. The F, depreciate instruments and equipments by 20% and furniture by 10%. When we depreciate instruments and equipments by 20%, so how are you going to calculate it? So 2,40,000, it's mentioned over here, right? 2,40,000 into 20 divided by 100, and you do its percentage, you're going to get 48,000. We're going to get 48,000. So I've written the direct amount over here, 48,000. So that's nothing but I've taken this 2,40,000 into 20 divided by 100 is nothing but 40,000. You're going to write directly the adjustment amount. Okay, you're not going to subtract or nothing like that. You're just going to write directly the adjusted amount. Next one, by diet expenses 36,000. Is there anything mentioned about diet expenses? No. So we're going to take directly and write the amount directly, 36,000. And then by government securities. By government securities, let's see, government securities, it's very important that, as I said, you government securities investments, you're going to record which side? You're going to record in the balance sheet. You're not going to record in the income and expenditure account. Why? The government securities are nothing but they are the capital items, right? So as a result, you're not going to write in the income and expenditure account. You're going to record in the balance sheet. Government securities. By office expenses. By office expenses, I'm going to record it by office expenses 70,000, but there's an adjustment which is given, that is office expenses outstanding. It's 10,000. So what you're supposed to do? 70,000 plus 10,000, that's nothing but 80,000. So to office expenses is 80,000. Next one. By purchase of medicines. By purchase of medicines is how much? 24,000 mentioned in the question, right? By purchase of medicines is 24,000. So by purchase of medicines 24,000, but they have also given an adjustment we have in E. If you just check out, you can understand that the stock of medicines as on 31st to 3 2013 is rupees 4,000. Okay, so by the real it was given that it was by purchase of medicine it was given over here 25,000 24,000, but the stock of medicines on 31st to 3 2000 at the ending of that year, at the ending of that month, was basically 4,000. So what you're going to do, you're going to subtract 24,000 minus 4,000, you're going to get 20,000. So this is the original amount which you have, which you're going to write in the expenses side. 24,000 minus 4,000 is nothing but 20,000. Next one. By office expenses is done, purchase of medicines are done, and similar way as I said you before, to office expenses 70,000 plus 10,000 because it's mentioned in the adjustment. By furniture, why are we not taking furniture in the part 1 video as I said you before? By furniture is nothing but it is a capital item, capital, right? So furniture, so for not capital item, so basic, I'm sorry, it's like you're going to just check the adjustments. It is basically a revenue expenditure, as I said you before. It is a revenue expenditure where it is 1,20,000. So 1,20,000, just check out the adjustment. So adjustment, do we have any type of adjustment over here? Depreciate instruments and equipments by 20% and furniture by 10%. So furniture is 1,20,000. 1,20,000 into 10 divided by 100. 1,20,000 into 10 divided by 100. That's nothing but 12,000. So I've written it over here. 12,000. So furniture is 12,000. And the next one is, let's check whether we have completed everything. By salary, yes, we have taken instruments and equipments 2,40,000 by into 20 divided by 100. So you're going to get it as 48,000. By diet expenses 36,000. Directly you're going to write because there's no adjustment given. By government securities nothing but it is a capital item. So 20 lakh you're going to write directly in the balance sheet. Next, by office expenses it is 70,000, but there's an adjustment that is outstanding is rupees 10,000. So 70,000 plus 10,000 is 80,000. Furniture, yes, furniture is which item? It is a revenue item. Good, it is a revenue item. It comes under the revenue expenditure. So revenue item, it comes under revenue expenditure. So 1,20,000. Adjusted, how much percentage it's given? 10%. So 1,20,000 into 10 by 100, you won't get the amount, just write it directly. So 1,20,000 into 10 by 100 is nothing but 12,000. Next one, office expenses are done. So we have added the office expenses. Furnitures are done. By purchase of medicines 24,000, but the stock value as on 31st to 3 2013 was rupees 4,000. So you are subtracting it. 24,000 minus 4,000, that's nothing but 20,000. You have written it directly over here. Now remember carefully, by closing balance you wouldn't be writing an income and expenditure account, you will be writing in the balance sheet. By closing balance cash and bank, you will be writing directly this amount in the balance sheet. Next one, let's look on towards our receipt side. Receipt, right, they have given 2 donations is how much? 4 lakh. 2 donations they have given over here, but remember carefully, as I said you in the part 1 video, donations are nothing but donations we are going to record in the balance sheet. To fees from patients, yes, it is an income. So what not fees from the patient, it is occurring regularly, right? If that's an hospital, if Arpita's nursing firm is an hospital, obviously there are more amount of patients which are coming and they're going to pay for it. So the fees from patients is regular. So you're going to write directly 50,000. You're going to write this amount directly. So receipts, you're going to focus on the income side. 50,000, 50,000. To entrance fees. To entrance fees is 40,000. So I've written it directly 40,000. Entrance fees. Entrance fees is an income. So I've written it entrance fees 40,000. To subscriptions is how much? 2 lakh. So in subscriptions they have given few adjustments over here. I've written over here 2 lakh, but they have given few adjustments. First one, subscriptions received in advance is 20,000. So remember carefully, when subscriptions received in advance is how much? 20,000 plus donations are to be capitalized. Next one, we can also say that one more subscription which is given over here is like outstanding subscriptions 40,000. That means that they have given 2 adjustments over here. First one is subscriptions received in advance, that is 20,000, and outstanding subscriptions 40,000. So at that case, subscription amount is how much? It is how much is the subscription amount? It is 2 lakh. So this 2 lakh, directly I'm writing the 2 lakh over here. I'm just saying you the procedure step by step. 2 lakh. Then we are going to add the outstanding subscription. So remember carefully, always you're going to add the outstanding subscription, and then advance we are going to subtract. So remember carefully, I've written this what subscription amount, then I'm going to add the outstanding subscription, that is nothing but 2,40,000 minus the advance. What is the advance amount given? The subscriptions received in advance is 20,000. So 2,40,000 minus 20,000, that is nothing but 2,20,000. 2,20,000. Simple concept. For the advance, what are you going to do? In advance, you're going to subtract, whereas in outstanding subscription, when it is given, you're going to add it. So now this amount is 2,20,000. So guys, the next one which is mentioned over here is endowment fund. As I said, you endowment fund is nothing but it is a capital item. So where is it going to come? It is going to come in the balance sheet. So you're not going to write in the income and expenditure account. And then to interest from bank, yes, you're going to write interest from bank, that is nothing but 4,000. To interest from bank, 4,000, you have written it. And miscellaneous receipts, that is 6,000. To miscellaneous receipts, 6,000. So now that's all. Let's have a total of all this amount. So it's mentioned over here, it's like supposed to add everything. So once you add up, so the debit side total is nothing but 2,96,000, whereas credit side total is 3,20,000. 3,20,000. So now which side is more over here? Is it 2,90,000? Debit side is it more or credit side is it more? The credit side is more. So obviously when credit side is more, you're supposed to write 3,20,000. 3,20,000 you're going to write in the both the side. 3,20,000. 3,20,000 minus 2,96,000 is nothing but you're going to get 24,000. So you have to write to income over expenditure is 24,000. So now debit side or credit side, which amount is more over here? Credit side amount is more. So you're going to write directly the credit side amount, that is 3,20,000 on both the sides, and both the sides as rupees. Then you're going to subtract 3,20,000 minus 2,96,000. You're going to write in the you're going to write in the debit side. Why? Basically because if credit side is more, you're going to write income over expenditure in the debit side. So in case if debit side were if the debit side would be more, just imagine if debit side would be 3,20,000 and credit side would be 2,96,000. Just imagine if the debit side is 3,20,000 and the credit side would be 2,96,000, then it would be to expenditure over income. So that means that this side would be more than, so you're going to write over here whatever amount which is in the debit side. If this side is more, you would have been written this amount both the sides. Then which amount would be there in the credit side, you're going to subtract it and you're going to write in the credit side. And then you're going to write to expenditure over income. Okay, if debit side would be more, and so that in the credit side when you subtract and write, you would be writing to expenditure over income, that particular type of income you would write. But now as on this question we could see that the credit side was more, so the credit side total is 3,20,000. 3,20,000 minus 3,20,000 is more, so you're going to write in both the side. This amount you're going to minus it with 2,96,000, that is nothing but 24,000. So 24,000 you're going to write as to income over expenditure. It is an income over expenditure, that is nothing but 24,000. Now let's prepare the balance sheet for this sum. The balance sheet as on 31st/3/2018. Liabilities, balance sheet format, as you know that it is liabilities, rupees, assets and rupees. So now remember carefully, when you're preparing a balance sheet, you're going to write directly the capital fund. Capital fund is very much necessary. You're going to write the capital fund first, and then what are the things you're going to write in the capital fund? You're going to write the donations, endowment fund, life membership fees. If it is given, you're supposed to write it first, plus excess of income over expenditure. You're going to write these things in the capital fund side. So what are the three things you're going to write? You're going to write donations, and then secondly you're going to write excess of income over expenditure. So the donation which is given in the question is 4 lakh. So you're going to write in the inner column. Inner column is how much? 4 lakhs. Excess of income over expenditure is how much? Excess of income over expenditure is nothing but 24,000. In the previous problem we got it as 24,000. So 4 lakh is the donation. It is mentioned in the question. And then excess over income, we have taken it from the income and expenditure account. Income and expenditure account, 24,000. So 4 lakh plus 24,000 is nothing but 4,24,000. 4,24,000. So now along with it, we also discussed that endowment fund, it will come in the balance sheet because it is a capital item. So endowment fund is 20 lakh. You're going to write it directly 20 lakh. There's no adjustment given, nothing like that. Just write it directly 20 lakh. Now it is one of the most important thing which you are supposed to analyze over here. Now let's look at the adjustments. So adjustments is like office expenses outstanding is rupees 10,000. So office expenses, liability, expenses are nothing but it's your liability. So you're going to write the liability amount 10,000 directly in the liability side. So this 10,000 amount, the office expense which is 10,000, you're going to write under the liability side rupees 10,000 because it is an expense. Expense are nothing but your liabilities. Next, remember carefully after writing the capital fund, you are going to take all your adjustments and you are supposed to complete the liabilities and assets. Liabilities and assets that you are supposed to classify them and put them, because the balance sheets are very important for analyzing your non-profit organization and how the accounts it is functioning. So next one, subscription received in advance rupees 20,000. So subscription which you're receiving in advance, that's a liability for you, right? So you're going to write this amount directly over here. That subscription received in advance is 20,000. You have written it directly 20,000. Next one, donations are to be capitalized. Outstanding subscriptions, how much they mentioned over here? Outstanding subscription is nothing but 40,000. You're going to write the outstanding subscription 40,000 over here, but remember advance and subscription which is 20,000, you're going to write over here. So outstanding subscription always you're going to write in the asset side because you have already that in your organization, that is 40,000, and subscription in advance that you're going to write in the subscriptions received in advance, you're going to write it in the liability side. Next one, the stock of medicines as on 31st 3 2013 is how much? The stock of medicines as on 31st 3 2013 is nothing but 4,000, right? It's mentioned over, so it's an asset for you, right? So as is mentioned before, I kept an adjustment for you. I kept a note for you. That's nothing but in adjustment, stock value is the closing stock value. That means that they have given the stock value is the closing stock value. That means that they have mentioned over here, stock of medicines as on 31st 3 2013 is 4,000. So remember carefully, whenever they're giving you stock of medicines as on 31st 3 2013 is rupees 4,000, remember carefully that it is nothing but it is the closing stock. Remember always it is a closing stock. Whenever they are giving the stock value, that is the key for you to understand that that is a closing stock. So closing stock is how much over here? 4,000. So I've written the 4,000 over here. Next, which are the other things which are left out over here? The last one is F, that is depreciate instruments and equipments by 20%. So what you're going to do, this amount is instrument and equipments amount was rupees 48,000, right? Instrument and equipment adjusted amount, that is nothing but how do you get 48,000? That is 2,40,000 into 20 by 100. You're going to get 48,000. So now what you're going to do in the balance sheet, you're going to subtract 2,40,000 minus 48,000. Okay. So I've written it directly, 2,40,000 minus 48,000. I'm going to get 1,92,000. I'm going to get it as 1,92,000. And the next one is furniture by 10%. So what am I going to do? Where's the furniture amount? 1,20,000 is given, right? So 1,20,000. So 1,20,000. Furniture is 12,000. Adjusted amount is 12,000. So as you know that 1,20,000 into 10 by 100, because the percentage they have given it as 10 by 100, right? So what did I do over here? 1,20,000 into 10 by 100, I got it as 12,000. So in my balance sheet, what I'm going to do? Similar way, 1,20,000 minus 12,000. I'm going to write directly the furniture amount. It's 1,08,000. Then which are the other things which you didn't write it over here? We didn't write the cash and bank, right? We didn't write in the income and expenditure account. So we are going to write in the balance sheet. So that is 10,000 and 1 lakh. So it's 1,10,000. You're supposed to write it in the asset side. So cash you have written at 10,000, bank you have written at 1 lakh. So this is the balance sheet. After writing the capital fund, I've written all the adjustments. Even remember carefully, we didn't write the government securities. We didn't write in the income and expenditure account. We kept it as a pending, right? That is 20 lakhs. This 20 lakhs you won't write directly because there's no adjustment, nothing like that. Just write directly the amount, government assets. So remember carefully, the government security investments, these are nothing but these are the assets. So you're going to write directly rupees 20 lakh. So now when you just total up, it is going to be 24,54,000. It should match. That means that 24,54,000 should be equal to, your liability should be equal to the asset. Then only we can say that that balance sheet is correct. So guys, that's all for today's video. So now in this video we came to a conclusion about how to prepare an income and expenditure account as well as a balance sheet. So it's very important that you guys go through this video again and again. Why? Because in case if you don't have a very much clear picture about how to prepare an income and expenditure account and a balance sheet, it is going to be really tough for you to prepare and further function in the NPO, that is non-profit organization. So there are little more advanced problems in NPO. So in my next video we'll be doing little more sums regarding it. And if you do like this video, please do like it and subscribe. Hope to see you in my next video, and I had a lot of fun time with you guys. Bye, goodbye, love you, wishing you the most more day. Goodbye.